There's a few really interesting changes that I think blockchain technology will bring to the financial services industry. The information flow and the flow of funds will occur simultaneously. And so if we think about what benefits that brings, that's going to allow smaller banks to make direct payments to other small banks globally rather than relying on a whole string of intermediaries. That will reduce the capital costs for banks, especially smaller banks, because they'll be able to access a more efficient system and they won't need to keep capital tied up in bank accounts all over the world. So the advent of instant payments where the information and the money flow together and the money doesn't get to the final, either goes to the final receiver or it comes back to the sender but never gets stuck in the middle. That's pretty revolutionary, and it's essentially like removing a global tax on commerce and payments. So I'm very excited about that application and the welfare benefits that it will bring, particularly for countries that can't be accessed quickly, countries where it might take 7 to 8, 9 days to get money from point A to point B. Those countries will particularly be brought more into the global financial system. Bitcoin security is a very complex subject, as is the security of any distributed ledger. Something that can be hard to understand is somebody will say, oh, there's a fixed number of Bitcoins and the mining works like this and the Bitcoins will be distributed in the following way. It's very predictable, that can't be changed. On the other hand, it's open source software and people can modify the software, and they are every day. So how is something kind of hard-coded and immutable when the software itself is a living object that's provided by a developer community? So the answer to that is not completely crisp, but some things were sort of hard-coded into the system that weren't able to be changed. And other things are soft-coded, so things that can be changed have to do with things that would affect the efficiency of the system and so on. And then the developers themselves, once they release code, we need to have some consensus of the community as to whether to adopt the changes. So it is, though, a little bit scary to think about having large amounts of people's assets on a system that's supported by open source software without someone in charge, without someone to call if it breaks. On the other hand, companies that build software where there is someone to call when it breaks, they still build software that breaks. And there's other risks with that model. So ultimately, it's kind of a work in progress, and we're going to have to see which models provide the most security, which ones are the most robust, and which ones are chosen for different purposes. So these are just a few examples, but again, I think our imaginations just aren't quite creative enough yet. I think the smart contracts plus the digital asset, something really cool is going to come out of it, but we're just not quite sure what it will be, what the really big breakout use case will be.